Welcome to the Prudent Pulse. We're covering the week of February 24th to the 28th. Now, this week we'll get the all-important Personal Consumption Expenditure, or PCE Price Index, which is the Fed's preferred measure of inflation and is expected to slow to a 7-month low of 2.6%. Recently, though, other inflation gauges have run hot. January CPI rose 0.5% for the fastest pace in 1.5 years. Then last Friday, long-term inflation expectations hit a 30-year high on tariff concerns, elevated oil prices, and an avian flu that has pushed up the cost of food. Now, this pickup in inflation is happening in developed economies outside of the US too. And for January, Euro area inflation is back up to 2.5%, UK inflation is back up to 3%, and Japan inflation is back to a 2-year high of 4%. Now, what is perhaps concerning, though, is that while inflation has dissipated expectations for rate cuts, treasury yields have declined anyway. And this likely signifies expectations of slowing growth, as the current administration seeks to cut federal programs and federal spending, and may be poised to cut hundreds of thousands of jobs. And that's this week's Prudent Pulse.